Hi, this is Victor. I wanted to provide a bond report for May 28th, 2022. And the month of May, we've seen interest rates level off and then actually decline over the last couple of weeks. And when interest rates go down, bond prices go up. And that makes bondholders happy because bonds are worth more. So a bondholder could sell it for more potentially. And in addition to having your investment go up in value, bonds provide a really nice annual return that I'd like to tell you more about. Before I jump into some other graphs and so forth, let me review some of the bonds that I own just to show you one day changes. The New York Convention Center Development Corporation issues out a municipal bond. It went up 2.3% in value. So just in one day, it went up 2%, and they pay a really nice annual return. Spirit Aerosystems, aerospace company, their bond went up in value 2% just in one day, and they provide a really nice annual return. So bonds are making a lot of sense for my overall portfolio. I own real estate, stocks, bonds, and crypto, and that's in the order of biggest to smallest. Most of my savings in real estate, stocks being second. And then a very small portion at the beginning of the year was bonds, but I've begun to really grow that because I think it's a good time to buy bonds in 2022. They provide a really good stream of income, and they really have a stable value, so I can protect my capital better. And this year has been really volatile on the stock market. Stock market's down about 14% year to date. It's been really, really volatile. So it's a really good year for me to pay more attention to the bond market, study it, and invest in bonds. Let me share more with you. All right, so let's review interest rates first. Interest rates really affect so many things. They affect the bond market, the stock market, mortgages on real estate. I'm going to talk specifically about bonds. Bonds, if you look at where interest rates were just in 2018, 3 years ago, roughly, they were, I'm going to call normal to the last 10 years, maybe 15. And they really dropped. And they were dropping before COVID, and then COVID came and they really dropped because the Federal Reserve lowered interest rates down to zero. In Europe, they were actually negative interest rates. And they started printing money and giving money to corporations and giving money to people. So it really caused an unnatural period of time where the rates were just so low. But now that inflation is a big problem, the Federal Reserve has increased rates really fast. So this increase provided, in my eyes, a really good opportunity. As interest rates rise, bond prices drop. So you could, from my point of view, I was buying bonds at a discount compared to where they were selling before. Second, the annual return goes up because interest rates went up. So that's great. I'm building a portfolio, and it's going to be a steady stream of income at a higher annual return. So that's the opportunity that I saw. That's the opportunity I'm trying to work with. Now, I'm going to show my high yield bonds just as an example of where there could be a lot of annual return potential. The biggest potential is with a company, Rite Aid. They're a pharmacy. They have a bond. It's less than 5 years to term, meaning at 5 years, they give you the bond face value back. They're sold at a really good discount, and it has a very high coupon rate. So combined, you can get 23.8% annual return on Rite Aid, which is a great return. The oil industry, this is a midstream company. It's actually a partnership, and they operate transferring crude oil from where it's extracted to where it needs to be refined. It's classified as a high risk, junk bond, but it has a fairly short duration or term, less than 3 years, and overall about a 15.545% annual return. So some really good opportunities out there. And here's that New York Convention Center that I showed earlier. it has about a 12% annual return. So really nice annual returns are available out there. And this, again, is going to diversify away from stocks and put me into bonds and provide a more steady, stable way of investing, even though I'm taking on some risk with high yields. The next list I'll share is short-term bonds. So this bear market isn't going to last forever. We might be in a really good bull market in 2 years, maybe 3. So short-term bonds are a pretty good idea, meaning you buy a bond, it's going to maybe have a term of 2 years, maybe 3. And here are some ideas there. These are bonds that I own. A couple that I point out: Carnival, this is a cruise ship company. They're back operating, you know, having people have fun on their boats, and they're doing well. A lot of people are booking their cruises, and they've got their business going again after COVID really shut them down. They have a bond. It has about a 5.5 a time period to mature, and you can make or I can make 9.49 annual return on that investment. So fingers crossed that Carnival doesn't, you know, go bankrupt or anything like that. But it seems like they're off on the right foot, you know, really taking off. Their business is back to, you know, where it used to be, and hopefully it'll stay that way. And then another one there, the inflation protected bond fund. That's a good one because this is more like a mutual fund of bonds, and it provides a nice 7.5 annual return. So, you know, some good places to put money away for a couple of years. Maybe this is money that you may need, or money that you want to invest in stocks or real estate or something else. But right now, I don't believe real estate's a really good idea. I'm a real estate investor, and I think prices are going to go down in general, and it's going to take 3-4 years for the market to get good again. Stocks, you know, you could just read any kind of business journal or watch CNBC and realize that, hey, stocks are pretty risky. So might be a good place to put money into short-term bonds. Make a good annual return. You know, you're not going to break any records, but your capital will be preserved well in short-term bonds. All right, so that's my bond recap for the week. It was a very good week for bonds. With interest rates dropping, overall, my bond portfolio did really well this week. It went up in values, you know, quite a bit, and I stand to get a really nice annual return overall. So I'm winning 2 ways. So it's great to have a good bond fund, you know, in my overall portfolio of investments. One note: this is not investment advice. I'm not recommending you buy any particular bond or security or stock. This is for entertainment purposes only. Good luck investing in 2022. Do me a big favor and like my video. It'll help my channel. And also, if you would like to see more videos like this, consider subscribing to my channel. Thanks again. Bye-bye.